Good afternoon from Bangladesh. Assalamu alaikum. Dear stakeholders and investors and analysts, customers, very good afternoon from Prime Bank family. We are here to do our earning disclosure for financial year 2019, which we just confirmed through our honorable board members as of last Thursday, and you may have already seen it being posted on the website. Today, along with me, I have a few of our senior management team members present here in this webinar, I would say web presentation. Reason, as you all know, that we had been doing the earning disclosure through web presentation before, but now we're doing from different geographies or different locations, sitting at our respective homes, given the unprecedented scenario that we are all facing. I have with me one of our Deputy Managing Director, who is also heading the Corporate and Institutional Banking and Commercial Banking Division, Mr. Faisal Rahman. I have with me Mr. Mohammad Tawhidul Alam Khan, Chief Risk Officer and Deputy Managing Director. I also have with me another Deputy Managing Director and Chief Financial Officer, Mr. Habibur Rahman Chaudhry. I also have with me Mr. A.N.M. Mahfouz. He is heading our Consumer Banking Division. I also have Syed Omar Tayyab, excuse me, who heads our Micro and Small Medium Enterprises Banking Division. I also have Mr. Abdul Halim. He is the Chief Operating Officer for the bank. I also have Mr. Shams Mohaimin. He is heading the Transaction Banking, Financial Institutions and Structured Finance Division. I also have Mr. Muhammad Jashimuddin, who is heading our Internal Control and Compliance. And lastly, but not least, Najmul Karim Chaudhry, our Head of Corporate Affairs and, Head of Brand and Communication. To begin the earning disclosure, I would kindly request now Habib, our CFO, to start the presentation first.
Right. Thank you so much, Ravi. I think we can see your presentation slides on the screen, right?
Yes, we can.
Yeah, I'd like to start with forward-looking statements. This is a standard disclaimer from Bankspur. I understand that the viewer is going to read it out and understands, and whatever investment or other decision will be taking is a disclaimer for that actually. They'll be reading it out before any investment decisions made out of this earnings disclosure. To give a little bit overview of group structure, Prime Bank Ltd has 5 wholly owned subsidiary company, 2 local subsidiary companies, Prime Bank Investment Limited or Merchant Bank and Prime Bank Securities Limited, both track holders and members of both the stock exchange, Dhaka Stock Exchange and Chittagong Stock Exchange. We have 3 overseas subsidiaries, one in Singapore, Prime Exchange Company Private Limited, one in UK, Prime Exchange UK Limited, and we have finance company in Hong Kong, PBL Finance Hong Kong Limited. If you go through the financials now, if we start with interest income, has gone up by 10% versus 2018. This growth of 10% is basically dominated by yield efficiency not volume actually, because our strategy on this was quality growth of loan book instead of quantitative growth. Therefore, though we have grown only 4% on lending book, but our interest income has gone up by 10%. Interest income expense has gone up by 11% from 1,054 crore to 1,168 crore, mainly because we have been able to increase our deposit book by 1,800 crore, representing more than 10% growth. And this is how our net interest income has gone up by 8%. If I go through the yield and advance, cost of deposit and spread, what I said is that interest income has gone up because of yield efficiency, and we started our yield on advance in 2018 at 8.51%, and we have been able to improve this yield on advance to 9.15% at the end of 2019. On cost of deposit side, as you understand that in 2019 the market was very tight, and in that tight and challenging environment, we have been able to contain this cost of deposit, and you're seeing it's almost flat. We started the year at 4.70% and end the year at 4.81%. So the net interest margin or spread has gone up by almost 0.55%, I mean 50 basis points. Though we have not offered very high cost of deposit, but we have been able to maintain liquidity in the market. If you go through this AD ratio, in 2019, our AD ratio only was 80% versus regulatory requirement threshold of 85%. So, in one hand, we have been able to maintain good liquidity in our book. On the other hand, we have not offered very high deposit interest rate in the market. That is how I believe we have efficiently managed our deposit book in 2019. We took another strategy is that considering credit risk in the market, we have heavily invested in risk-free securities in 2019. We have our incremental investment in Treasury bill bond was more than 2,000 crore in 2019, which has gone up almost by 80%, and that's how we have been able to increase our investment income by 33%, from 215 crore to 286 crore in 2019. Commission, exchange and brokerage income is almost flat. A slight degrowth we are observing here, 2%, and that was part of our strategy on certain business. And other operating income has gone up by slightly by 7% only. That's how our operating income has gone up by 10%, but our operating expense is almost similar to last year. You'll be happy to know that our cost income ratio has come down by almost 5%, from 56 to 51% in 2019. And that is actually our strategy, not increasing the risk, considering the credit environment in the market, and managing or optimizing our operating expense. And that's how we have been able to increase our operating profit by almost 22% in this challenging 2019. On loan loss provisions, it has gone up by 29%, from 178 crore to 230 crore. as you understand, it was part of our strategy to clean our book in every possible way, nothing to hide under the carpet. And you'll be happy to know that our provision coverage ratio has increased significantly in the year 2019. In 2018, provision coverage ratio was only 65%, where we have been able to increase this coverage ratio to 103% in the year 2019. On tax space, we have made sufficient provision for income tax also. It has gone up by around 90 crore, mainly because our operating profit has gone up by 123 crore. And last year, we had significant amount of return of loan, and we got tax credit of that return of loan in 2018. Because of this incremental loan loss provision and tax provision, our NPAT has gone down slightly, and net profit after tax on solo basis has also gone down because of as you understand, every country is facing a little bit challenging time in capital market. Here, the subsidiaries performance from these 5 subsidiary company. Total loss on NPT was 33.44 crore, and the mainly because of performance in the capital market. If we go through our key financials, our EPS in 2018 was 1.93. In 2019, it is 1.77. On solo basis, on consolidated basis, .04% versus regulatory requirement of 12.5%. In 2019, we have been able to increase this score a little bit further to 17.42%. And cost income ratio, this is very important things for us, and we are very dedicatedly working on this particular issue. We have been able to contain our operating expense, and this cost income ratio has come down from 55.66% to 50.82%. And on overall basis, our net asset value has increased from 23.12 to 23.65. This is net asset value per share. If we go through our deposit book, we have been able to grow at 10% in 2019. The strategy, the key core strategy on mobilizing this deposit book is what I already explained. I mean, not to offer very high interest rate in the market. environment in the country. So though we have not been on remittance side, we have been able to grow by almost 27% compared to 2018. We have pretty good size of return of loan in our book, which indicates that in last couple of years, we have actually cleaned our book as much as we can. And on capital side, I already told you that our CAR is 17.42%. And the other good thing is that out of this 17.42%, almost 11% is Tier 1 capital. So that's it at this level from my side on financials. I think, yeah, it's over to you, Rihal Bhai.
Thank you, Habib. Thank you for just giving us the snapshot of the financial disclosure. Just to add to what Habib said so forth, I mean, from the bank side, from the management side, and from the board side, we're very happy with the operating results that we have been able to register during the year 2019. I'll just add few lines here. Is that as we all know that the banking industry in Bangladesh had been going through a lot of challenges, and especially 2019 had been a year of mammoth challenges in terms of liquidity. So if you ask us that what has been the significant achievement for the bank in this challenging time, is what Habib just showed you in the curves or in the figures, that we have been able to reach to our ever highest deposit base in the last 5 years. And to be more specific, in the history of the bank, we have been able to reach to this deposit mark for the second time only. So this had been possible because of the coordinated and concerted effort from all parts of the bank, wholesale bank, consumer bank, MSME, all business verticals, all support function colleagues. They have all been focused in terms of gathering deposit. The best thing for us, which he hinted in the presentation, is the way we have been able to efficiently manage our asset and liability and get the revenue out of that. The thing was that we have been kind of benchmarked 100 to 150 basis point less in terms of the deposit rates that we had been offering in the market. So that is a kind of a sign of the strength of the brand that we have been able to establish over the last 25 years. As you all know that this is the year 2020, as on last 17th of April, the bank celebrated its 25th year in play. So the consumers, or be it institutional or be it individual, what we have seen that in terms of the fixed deposit renewals, almost 95% deposits had been renewed with us, which is a kind of a renewal of the vow from their side towards Prime Bank, the bonding that they have been having, despite getting 100 to 150 basis point less than what is being. So we believe that this has been a proven strength of the bank, that we are a place of faith or trust, where our customers do trust us, and given the challenges that they have seen in the market, they have been putting all their money with us. Now, the next other point that I want to highlight here overall is, other than the deposits, is on the credit side. And when we say credit in terms of the risk management, is that our advances, if you have looked at the presentation just a while back, the market grew much more than we grew. But from our point of view, we had always been very conscious that the credit climate ongoing in the market has not been very satisfactory to our expectation. So we wanted to play it safe, to be very honest, and we just didn't want to make any mistakes. So what we did, we de-risked our portfolio to a certain extent, and we tried to manage our portfolio. We tried to stick to the core base that we have grown we have created over the last 25 years. My colleague from Wholesale Bank will highlight further on that area during his time. Excuse me. The other area that we have been able to manage well is the non-performing loan side. I mean, as you have seen that from 6.16, we have been able to bring it down to 4.66, which is a significant achievement in this year, 2019 as well. The slight decrease or degrowth that we see in the profit after tax is something which is related to our overall strategy for the bank over the last 3-4 years. As Habib mentioned, that we didn't want to have any kind of thing under the carpet, and we have been trying for the last 3-4 years at a row now to clean our balance sheet as much as possible, to create a very sustainable base in the balance sheet. As a part of that, we continued with our provisioning, aggressive provisioning, and I'll be very honest with you, it was just one single account where we could have possibly dealt it differently, but we decided to clean it up and take the full hit. So if you look at the operating performance of the bank in 2019, that has been very, very good. We, from our management side and the board, have been very satisfied with the 21% growth on the operating profit side. And then we decided that given the credit climate that we foresee during the year 2020, and as we all know that things have already become very difficult, which was not known obviously in 2019, but we decided to kind of take a cautious step and clean the balance sheet as much as possible. So I'll stop here and I'll request my Wholesale Bank colleague, DMD, Mr. Faisal Rahman, to highlight a few points from Wholesale Bank perspective. And before we do that, I would just want to, sorry, Najmul, if you could just put up that slide. Thank you for reminding me on that. 2000, not this one. We'll come back to this a little later. The accolades one. Najmul, if you could just go back to that awards and accolades slide. Yeah, thank you. 2000, if you could just put up that slide once again. 2019 and 2020 has been a year of, a continued year for recognition from different parts for Prime Bank. I mean, Global Finance recognized Prime Bank as one of the best banks in Asia Pacific. Asia Money recognized Prime Bank as one of the best digital bank in Bangladesh for the Prime DG product that we launched, as well as for all the other IT and digital initiatives which are ongoing in the bank. So these two have been significant accolades that we celebrated along with members of all our Prime Bank family. Thank you, Najmul. I'll just hand it over to Faisal Rahman now to speak a few things about wholesale banking, what happened in 2019. Thank you.
Thank you, sir. Assalamu alaikum and very good afternoon to our viewers. I'll just explain the wholesale banking. Wholesale banking segment of Prime Bank Ltd provides single-stop comprehensive relationship coverage to its customers, offering full suite of products and services ranging from term and working capital financing under both conventional and Islamic window, trade financing, treasury support, cash management solutions to project and syndication financing. It is noteworthy to mention that Prime Bank has been the only local bank to introduce transactional banking in Bangladesh, offering cash and trade sales support and solutions to our valued customers. As you are aware that 2009 has been a challenging year for the banking industry. We have witnessed stress in liquidity towards the first half of the year, slowdown in private sector credit growth, steep rise in non-performing loans. At the same time, we also witnessed notable growth in public sector spending. Our strategy has been more or less to be associated with the infrastructure development either directly or indirectly. Nevertheless, the prime focus sector remained our RNG textile, commodities, pharmaceuticals, agriculture, cement, steel. In other words, it's a very well diversified portfolio for Prime Bank Limited. So now let me take you over to the presentation, the key drivers. So we will start with the loans and advances. Nazmul, if you can go to the previous slide. Thank you. We registered about 566 crore taka growth in 2019. You will be happy to know that we have de-risked the portfolio by 1,050 crore. So the real growth would be probably around 8% plus in terms of asset growth. But due to this de-risking, because we were focusing on quality assets rather than volume, the growth was around 3%. The prime strategy was to selectively onboarding quality assets, make sure the portfolio is well diversified. We have been working very closely with Central Bank on different refinancing schemes comprising of sustainable finance, GTF, FSSP, IPFF. You would also be happy to know that till date, we got the largest financing under GTF, the Green Transformation Fund from BB. In 2019, a total 33 new bookings have been made, primarily focusing on trade and transaction-based activities. We have done well on the deposit side overall, which was also one of the prime target strategy for 2019 deposit mobilization. We have grown the deposit book by 15%. Coming to trade, trade volume exceeded the USD 3.76 billion mark, highest ever since the inception of the centralized platform. So this is some achievement we have done. Process re-engineering has been done at the trade service desk to maximize efficiency. So this has also helped to boost the trade volume. In terms of quality of the portfolio, de-risk, as the Honorable MD has mentioned earlier, this has been a key priority also for 2019. We have managed to de-risk sectorial concentration, large exposures, simultaneously following strict underwriting standards whenever we were onboarding a new customer to minimize risk. You would also be happy to know that 75% of corporate loan portfolio is rated by ERA external rated agency, and 65% outstanding portfolios within the risk weight of 20 to 50%. Improved monitoring, MIS, and monthly portfolio review conducted to review account strategy is an ongoing thing for us. Through robust early alert monitoring system and tail end account management, we have been successful in bringing down the NPL of wholesale banking division to 3.49% in 2019. Nazmul, if you can go to the next slide. Thank you. People are the heart of the business, so we have been able to retain our key resources, and also we have been successful in acquisition of new talents from different organizations, which has enhanced the overall performance and capability. We have made Omega certification program mandatory for all our coverage RMs. And digital is the another area which is the prime focus of the wholesale banking division. In line with the need for rapid digitalization of banking services, we are continuously transforming our process to serve our wholesale banking customers in an efficient manner. Our transaction banking team is working relentlessly to bring new products customized as per client needs. So that is all from my side. I would now request Mr. Shams Moimin to do the transaction banking piece.
Thank you, Faisal. Ladies and gentlemen, good afternoon. I'll give you an overview of Transaction Banking International Division and Structured Finance and their performance for 2019. Transaction Banking has been launched around 5 years back to run the cash and trade business for the wholesale bank. If you look at the slide, our deposit under cash management has grown consistently over the years. In 2019, it has grown by 15% to 5,368 crore, and it accounts for 31% liquidity support for the wholesale banking assets. Around 48% of this liability is in CASA, which we are consistently focusing to grow with tailor-made technology-based solution for our corporates. In 2019, we closed 27 cash management deals. We want to become operating account bank for our corporates. For that, we provide end-to-end payment, collection, and liquidity management solutions. In 2019, we launched a corporate internet banking platform called Prime Pay. Through this platform, with single click, our customers can issue thousands of scanned signs, corporate checks, and pay orders. We have provided host-to-host real-time ERP connectivity to our customers. This helped them to automate their delivery order book management and auto-reconciliation of their receivables. We also developed and commercialized various liquidity management products, which helped WB to raise sticky liquidity in 2019. In 2019, we launched RFP for upgrading our corporate internet banking platform, which is under vendor evaluation stage. However, considering ongoing COVID-19 situation, we have already developed second release of Prime Pay electronic banking solution, which will help our customers to make online payments through book transfer, RTGS, EFT, and NPSB platforms. Now I will come to trade sales part of the business. In 2019, we managed an aggregate trade throughput of $3.76 billion, combining both import and export. Due to various macroeconomic headwinds, policy restrictions, challenging credit environment, and unstable global economic situation, we had made a very conscious, humble growth strategy. During second half of 2019, RMG and textiles saw a negative drag. On the buy side, RMG demand has gone down incrementally. And on the input side, price of basic raw materials like cotton fell significantly and thereby depressing the yarn price. We have seen major decline in commodity price, including products like sugar, CDSO, soybean extractions, HFO, for example. In quantity import remained steady, but due to fall in price, import consignment value decreased. Moreover, due to de-risking, as mentioned earlier, we also shredded BAU transactions and relationships as well. To bridge the gap, we focus on our core customer base to increase the trade wallet share. Moving to remittance business, in 2020, we grow our wage and commercial remittance throughput by 27% to $685 million. Thanks to our worldwide MTO relationship, including two of our 100% owned subsidiaries in United Kingdom and Singapore. In order to automate wage remittance services, we started a journey in 2019 to overhaul our remittance processing infrastructure with state-of-the-art technology. With machine learning capabilities, we have already deployed the core processing engine in Bangladesh, which has connected the MTOs through API. This week, we have gone live in Singapore. Now our customers in Singapore can send money instantly to beneficiaries having account with Prime Bank and MFS like bKash in minutes. We are also coming up with online remittance platform solution, which we will be launching shortly for Singapore, inshallah. On the structured finance side, as product partner, our structured finance, in association with our coverage relationship teams, has won numerous deals in 2019. During this period, the team won 5 fresh mandates to raise under syndication and ECA coverage. And during this period, we have also made financial closures of 3 deals. In recognition, in 2020, Prime Bank has been accredited Best Bank Award in Asia Pacific segment by Global Finance magazine, as mentioned already. I hereby conclude my presentation from the product side. Thank you.
Thank you, Faisal, and thank you, Shams, for highlighting the achievements and work being done in different segments of wholesale bank. Just to sum it up, I mean, as Faisal already mentioned, that de-risking has been happening there, but at the same time, the motto that as a Prime Bank Wholesale Bank team we have been holding over the last 3, 4, 5 years is to remain a core bank for our core customer base. So we are focusing on different areas where we would want to grow, but on a very selective basis. Transaction banking is very instrumental for us with regards to raising the corporate liabilities, especially on the CASA side. As Shams mentioned, that we are adding some features to our products and services, and especially through digitization, we have been able to gather more momentum on that side. The trade volume, we have been able, if I'm not wrong, Shams may correct me, that our market share, both in terms of import and export, has kind of grown, whereas the industry had been degrowing in both respects. And we all know that the realities on the ground had been that our national export faced a bit of turbulence during the second half of the year. But fortunately, through our penetration, through our relationship strength and product propositions, we have been able to grow our market share amongst the export base that we deal with. And on the deposit side, as a bank, we have grown, and the wholesale liability has also grown decently. But at the same time, if we go to the remittance piece, that has been one very good area where we have been able to register 27% remittance. Both our shops outside Bangladesh, we have in Singapore as well as in the UK. The colleagues from there have, through their relentless effort, have been able to gather, and as well as all the other MTO arrangements, as Shams mentioned, we have been able to, because we have changed our relationship model internally, the way we have rearranged our model of doing the business, and that has kind of put in more traction over the last year and a half. Thank you so much to Wholesale Bank as in whole for supporting us in the bank's growth and adding value to the bank's operating performance. At this point of time, I would request my colleague Syed Omar Tayyab to give us a little bit of highlights on what's happening at our one of the other strategic area for the bank, MSME banking, which is micro, small, and medium enterprises. Omar.
Thank you, Rahul Bhai. Very good afternoon to our viewers. 2019 has been another successful year for Prime Bank SME. Just to take our audience back a little bit, Prime Bank has started to revamp its MSME vertical through rebuilding and restructuring the business back in late 2016. So over the last 3 years, we have quite a successful journey in this pursuit. So in line with the bank's vision and the strategic objective to grow in MSME, we have further pushed our business agenda in 2019. So we have significantly grown our balance sheet in both liability and asset sides. In 2019, the loan grew by 13% and the deposit from MSME grew by 11%. So this is this point. There's a point that needs to be highlighted. In Prime Bank, we believe in comprehensive MSME banking, not just MSME financing. So our loans are almost being self-funded to the tune of 88% by its own deposit. So where does this growth come from? This growth actually comes from diversified customer inclusion. As you all know, the central bank has some strategic priority to promote MSMEs across the country. So in line with the directive given by the central bank, 86% of our total disbursement was disbursed into the segments of cottage, micro, and small. So this growth, our growth, doesn't necessarily concentrate only to the large segment clients. Also, our growth is not concentrated to mainly Dhaka, Chittagong, or big cities. In 2019, we have grown our rural portfolio by 30% on a year-on-year basis. Our women entrepreneur loan also grew by 32%, and our new acquisition number, it has also grown by 52% year-on-year. To promote our women entrepreneur, we have actually trained 416 women entrepreneurs across the country to facilitate them to run their business in a better way. We have also substantially generated export and import volume, trade volume in 2019. We have logged in $31 million in imports and $35 million in exports. Next slide, please. Nazmu? Next slide, please. Before that, okay, as I said earlier, beginning late 2016, the bank is strategically moving forward with the agenda of building a comprehensive MSME banking framework. So as you all know, risk management is a very vital tool, and building a comprehensive supervisory banking framework for SME is essential across the country. In line with this vision, in 2019, we have established 3 more CRM centers. Now our total credit risk management center. These are basically localized credit hubs where local SME customers' applications are being assessed. So we are now present in Dhaka, Chittagong, Kumilla, Joshore, Rajshahi, Bogura, and Sylhet, 9 locations, and Gazipur, also Narayanganj, 9 locations across the country where credit proposals are being assessed there. So it speeds up our TAT, and it streamlines our risk management system. We've also invested heavily on our resources. We have continued our capacity building activities throughout 2019. We have done workshop involving the SME relationship team, credit risk management team, and frontline branch management team throughout the year. And we have devised KPIs for all staff members who are involved in MSME. And also, we have promoted the business through regular sales campaigns throughout the year. We understand that MSME cost of operation is typically a bit on the higher side for MSMEs. So to offset the cost of operation, going digital is a must. In 2019, we have introduced the PI MSME, a digital loan application and appraisal system. So our RMs can now log in and submit an application through soft copy without any involvement of paper, which come to one of those CRM centers. They assess it electronically and they can disburse the loan, approve and disburse the loan through electronic processes. We have also revamped our end-to-end operating process, where all the stakeholders, starting from business, the branch, and the credit, and also the credit administration department, all are having a clear-cut accountability to shorten the turnaround time, because access to finance, when it comes to MSME, time is money. So we have to finance them within time. So we are working on that. Also, we have simplified our assessment requirement for small ticket loans. Next slide, please. On the product side, we have launched a flagship product, namely a flagship unsecured collateral-free lending product back in late 2018. Its name is Prime Shahoj. And seeing its success in last year, 2019, we have raised the ceiling to be 50 lakhs. And this is a very good product, which is being served to the cottage, micro, and small segments throughout the country. Also, we have developed and revamped all kinds of products for CMSMEs, for any type of CMSMEs. Basically, we want to claim that we are a financial supermarket for all type of MSMEs across the country. We provide loans, we provide working capitals, we provide guarantees, we provide import and export solutions, and we also provide liability solutions for all SMEs. And we have increased our focus on Bangladesh bank refinance schemes. There are a couple of schemes that are very good for the MSMEs, and we are actively promoting to our customers. Finally, before I conclude, our journey this year will be continued definitely for the MSMEs, and this year will be a very, very challenging journey for MSMEs, because as we all know, we are now in a situation which have been unprecedented crisis for all of us, and the MSMEs particularly are hit. They have been hit very hard over the last 3-4 months period. And as our bank's focus, we will be continually supporting our MSMEs. And I would like to share one thing, that we have already offered EMI deferment option for some of our clients who have been based on banker-borrower relationship to facilitate them to defer their EMI for 3 months. Okay, and we also made the renewal and validity extension processes very simpler for them. And we're also coming up with, in a big way, with the Bangladesh Bank provided stimulus package. We have already sorted out whom to finance. And in a very short time, we are planning to launch, disperse the loans throughout our branches. And we'll be beside our MSME. Thank you so much.
Thank you, Tayyab. That was the success story of MSME banking in 2019. In a nutshell, I mean, what we had been telling for past 2-3 years, that we have been creating the platform to do it right. And I believe that you can echo with me is that the platform is now ready and the platform has started kind of giving the fruit. So had it not been unprecedented time as we speak due to the COVID outbreak, I believe 2020 could have been a much better year for MSME banking. But as we all know, that not unique to us. It's all in the globe that we are all subject to this unfortunate times that we are passing through. But inshallah, looking forward to some more initiatives and better days to come very soon. What I will request now is Mr. A&M Mahfouz to highlight on the achievements of Consumer Banking Division over the year 2019.
Thank you, Rahul Bhai. Good afternoon and Assalamu alaikum to all the viewers. I would like to start my presentation by showing my heartfelt gratitude and sincere respect for all the frontline bankers who are working extremely hard to keep the economic wheel moving during this extremely challenging COVID situation. For consumer banking, 2019 was an interesting year with multiple milestone achievements in different areas in terms of business, cost efficiency, and productivity gain. If we look at the overall consumer banking numbers of 2019, this slide, thank you. Year-on-year consumer banking deposit grew by 791 crore, which is a clear 6% growth compared to 2018. Consumer banking deposit now comprises of 60% of total bank's deposit. Total consumer banking deposits stood at 13,057 crore as at close of business 31st December 2019. We have onboarded 53,000 new CASA account in 2019. 12,000 new payroll customers were added to the portfolio. Payroll banking successfully onboarded 50 new companies. Year-on-year, payroll banking deposit grew by 61 crore taka. Payroll salary disbursement crossed taka 100 crore per month. And we have also issued 45,000 new debit cards in 2019. Now, if you look at the business performance of Monarch segment, which is our priority banking service, Monarch deposit book grew by 217 crore in 2019, and that we have achieved with only 9 RMs. Monarch deposit book stood at 1,287 crore as at close of business 31st December 2019. We have launched our first Monarch center outside Dhaka, that is in Chittagong. We have increased the Monarch RM number considerably to serve this customer base better. On the product side, we have introduced Prime DG, the first digital savings accounts of the country. As Rahul Bhai have just mentioned, we have received international accolade for that. But I will be honest with the viewers that this was basically a brainchild of Rahul Bhai from the very beginning. Since the day I have joined, he wanted to have a digital account from Prime Bank. Just to update the viewers, Prime DG is a platform to onboard customers digitally without any physical intervention. We have introduced Prime motorcycle financing tagged with life insurance coverage. We have introduced insurance protection proposition for consumer loans and also for deposit scheme products. Process reengineering has been a continuous initiative of consumer banking throughout 2019. Under this initiative, we could complete the remaining legs of centralization activities, under which we have achieved few milestones. For example, automation of certificate issuance, automation of fees and charges realization, etc. As a cost-saving initiative and also to create convenience for the frontliners, we have introduced editable account opening form, which is available through soft copy, and we no longer print those expensive colored hard copy of account opening forms. Next slide, please, Nazmul. Consumer banking sales team has been a key area, a key partner of consumer banking business in 2019. One of the major achievements of 2019 was significant improvement of per salesperson productivity. Productivity increase in all verticals of sales team. Just to share, productivity increase rate of liability, asset, payroll, and credit card teams were 18%, 77%, 21%, and 31% respectively compared to 2018. In terms of branch banking, 14 branches and 56 ATM booths were refurbished and standardized in 2019. Sanchoy Patr processing activity was centralized, which gave us good efficiency gain. We have introduced one-stop teller service with zero authorization facility at all branches, which resulted in significant reduction of queue waiting time. From 2019, credit card business has been the major focus area of consumer banking. As a part of that, we have launched JCB Platinum Card, completed full conversion of the credit card base to EMV chip card from magnetic stripe base, centralized credit card acquiring business completely, introduced insurance coverage for our Islamic variant Hasana card. To strengthen the card business, we have taken initiatives to make our basics right first. As a part of that, Nazmul, next slide, please. Yes, thank you. Under Partnership and Alliance Initiative, we have introduced buy one, get one offer with all 5-star hotels of the country for our card customers. Onboarded 200 plus renowned merchants for 0% EMI program. Tied up with 300 plus different lifestyle and restaurant partners with attractive offers. Now let me give some update on alternate delivery channel or ADC. ADC has been and will remain as key focus area for 2019 as well as years to come. Under our ADC channel strengthening initiatives, Contact Center was launched in 2019 in 2 phases. Phase 1 in March, Phase 2 in September. Just to share some numbers, 67,000 customers were served in first 6 months in Phase 1 and 120,000 customers were served in last 4 months in Phase 2, which clearly indicates how important such delivery channels are becoming day by day. We have launched Monarch MasterCard Platinum Debit Card, introduced real-time interbank fund transfer facility through ATM and Altitude, which is our internet banking platform, introduced tuition fee payment facility through Altitude, standardized ATM booth across country in terms of currency denomination and outlook. In 2019, our transformation journey started with clear focus on 4 major areas. Number 1 was growing the deposit book. Number 2, taking the card business to the next level. Third was revamping our Altitude and alternate delivery channel. And finally, improving our customer service big time. Although, along with these initiatives, there were some other major initiatives that we have undertaken in 2019 and which will continue through 2020 as well, where launch of women banking proposition in 2020, with particular focus on a segment who actually needs banking facility, that is to ensure financial inclusion and diversity in true sense. Another initiative which we are working on is to launch Prime Bank agent banking proposition using an extremely cost-efficient model and not going by typical brick and mortar structure. And finally, we are working on significantly revamping our alternate delivery channel and internet banking platform by adding up number of world-class internet banking features and solutions. Inshallah, with our dedication and strong focus towards achieving our set goals and through step-by-step approach, we are confident that we will continue to deliver strong results in 2020 and beyond. That's all from my side. Thank you.
Thank you, Mahfouz, for highlighting the achievements of consumer banking piece over 2019. Just to summarize that, I would just want to add a few lines here. I mean, as far as you have seen that both, across wholesale bank, MSME, as well as in consumer banking, digital initiatives are very much in play. I mean, that is what Prime Bank is trying to push forward since 2018. And this is definitely going to continue very strongly. Consumer banking is a very important piece for us. We have a very decent distribution setup of 146 branches all around the country as we speak. And we want to leverage on that and want to increase the reach through more and more usage of digital channels. And as we all know that in these unprecedented COVID outbreak, it is inevitable that to gain more in terms of your operational efficiency, it is only the digital outreach that will take us forward. So thank you, consumer banking, and keep your good work going. The next, I would request our Chief Risk Officer and Deputy Managing Director, Mr. Tawhidul Alam Khan, to highlight a few things with regards to the risk management of the bank.
Thank you. Credit risk management. First of all, I want to discuss about credit risk management. That is asset quality. We have already seen in the balance sheet which have been shown by our Chief Financial Officer. Our NPL ratio was 4.66%. 2018, that was 6.16%, which is below industry NPL of 9.30%. NPL coverage ratio maintained at 103%, and percentage of rated loan to total eligible loan was 71.78%. Basically, it increased to around 75%. Regulatory highlights in 2019, there are some sort of changes of regulatory highlight, that is identification of a definition of NPL. There are some changes of NPL definition, and also the issue dealing of large loan restructuring, basically within minimum down payment. If we see the other risks across the business lines, which have been told by our fellow colleagues, wholesale banking, consumer and SME and transaction banking, they are the basically vibrant team of a Prime Bank for unique business scenario. From the risk management side, I want to say that the NPL ratio for wholesale banking only 3.49%. That is very small due to the strategies taken to diversify the portfolio and less concentration of large exposures and focusing of manufacturing sectors and quality customers and also mid-corporate customers. Basically, we are focusing in that area. Inside of SME, risk NPL ratio 11.17%, which is the below industry average 14%. Basically, we have already given the sub-delegation process authority on CRM hub, which has already been told by the head of SME that to further speedy for the loan processing system, there are some 9 hub CRM hub so that customer can get their approval faster from the bank. And consumer finance NPL ratio 7.36%, and there are some sort of facilities approval of personal loan and car loan within 24 hours in case of A-level payroll customers, and also introduced auto-generated approval sheet for credit card. If you see the other risk factors, that operational risks, anti-money laundering risk, and sustainable financing, you can see the operational risk. Risk-weighted assets for operational risks decreased by BDT 500 crore over the year 2018. We also established a proactive operational risk management culture in Prime Bank and developed specific key risk indicators as a monitoring tools for operational risks. In terms of anti-money laundering risks, I know that is very important for the banking scenario at this moment. We implemented enterprise-wide AML and CFT compliance program in 2019 and introduced comprehensive sanction screening system with international software downloads in 2019, and also introduced PEPS, politically exposed personal screening system, and advanced media processing, and only negative list for Prime Bank Ltd. In terms of sustainable financing, we see that disbursed $18.60 million US dollar from Bangladesh Bank Green Transformation Fund, which is the highest in the banking industry in Bangladesh, and disbursed BDT 1,900 million for financing in green products. And we also prepared sustainability report as under GRI standards, the first time in Bangladesh, and under global reporting initiative. But this is a recognition. I'm making an award at Platinum Award from Indonesia and Asia Sustainable Reporting 2019, and also awarded Gold Award in 2018. That's all from my part. Thank you very much.
Thank you so much. Risk management will always be spearheading as part of our overall strategy, because we will always remain very cautious and with regards to our selection of customers, managing their credit risk, operational risk, and all sorts of other related risk areas. So that will not change, rather it will get further momentum. And as you may have already heard that with regards to the digitization of different processes, risk management area is no exception, and the digitization and business process re-engineering is ongoing in that division as well. At this point of time, I would request our Chief Operating Officer to highlight a few things from the operational aspect of the bank.
Okay. Hello everyone. Assalamu alaikum. I will give some highlights on the operations division, and I'll request Nazmul to go to slide number 1, please. Slide number 1. If you can put it on the screen, please. Nazmul? Maybe I continue when he gives. We have 300 members operations team led by, yes, next slide. Yeah, keep it there. Led by a highly skilled set of managers and leaders. And another thing I like to highlight is that in 2019, we operated with 0 operational loss, and we achieved that due to 0 error in financial transaction throughout the whole year, and obviously 0 fraud. So, so during the whole year, we did not have to take any loss due to processing error or fraud. And I would request to go to slide number 3 straight, please. To slide number 3, yeah, keep it there. I like to mention our focuses in 2020. One focus is obviously automation, like in operations area, for example, in account opening, in the trade processing, we are taking automation initiatives, and we will continue that further. And that is definitely a big focus for us, and it started from 2019, and it will continue throughout this year as well. Multitasking the staff, that will give us more efficiency, and during the crisis period, a multi-skilled staff can contribute a lot more to the bank that we learned during the lockdown period, and we will focus that on more. And another big focus is obviously strengthening work from home capability. In fact, we have a very well-developed business continuity plan, and that has been tested eminently during the last 2 months during this lockdown period. We work from home. We not only checked our emails and everything, we actually did real-time system transactions. We did transaction processing staying from home. Our staff worked from home and served the customers, and we could achieve that by working closely with our technology team. And we, from home, a good part of our resources work from home. They processed LCs, they opened LCs, they opened accounts, they processed payments, obviously maintaining controls, and we faced no issue in that. Recently, government declared Taka 5,000 crore support package for giving salary support to the RMG workers, and we processed 86,000 RMG workers' salaries, and some of the staff work from home. And we were probably the first or amongst the first few banks to complete April's salary of the RMG workers. And that was a good achievement for us. And I like to highlight at the end that we are fully capable and we are ready for higher business volume, even when the full economic activities will be restored, and we expect that to be restored as soon as possible. So that's it from my side. I like to hand it over to MD sir, please.
Thank you. At this point of time, since I just want to briefly apprise you of what, as a bank, we have been doing or how we have been responding. This is an opportunity for us to just let all of you know how we have been responding to this unprecedented COVID outbreak that has affected our country as well. Najmul, if you could just put up the slides and we'll just quickly flip through those just to give a flavor of that. Najmul? Thank you. Just go to the next slide. Just to let you know, I mean, as a bank, we have been extremely responsive from the very beginning, and to be very honest, even before the outbreak occurred in Bangladesh. I mean, we started ensuring safety primarily for our employees and the customers walking into different offices, and we started building the awareness from the month of February. We devised detailed implementation of action plans. We started working in terms of alternative work methodology. We rearranged our work processes, the way we work and everything. The most popular term as we speak is work out of home. We started working around that from the mid of February, and we started taking action points. Go to the next level and next slide. Thank you. As part of the building awareness campaign from towards the end of February, early March, we started handing out or distributing awareness booklets and awareness messages to our customers as well, that what are the do's and don'ts and everything. So that was a part of our social responsibility, that from the very beginning of the outbreak or even before that, we started communicating to all our stakeholders. We did communicate to all our stakeholders with regards to the detailed work plans, the details of the outbreak and how things to be handled, what are the do's and don'ts. Guidelines, and the cleansing of all offices, premises and branches is a regular phenomenon. I can tell you that as we speak, 113 branches are operative all around the country. In different phases, we have opened them. In the initial days, 45 branches were operating 5 days a week. And as we speak, out of 113 branches, some of the branches, 40-odd branches are operating twice a week. 40-odd branches are operating 5 days a week, and 40-odd branches are operating 1 day a week. All sorts of health-related materials and cleanliness is strictly maintained inside the office premises, branches, and everywhere. Work out of home, as our Chief Operating Officer also mentioned, that the support function areas of the bank has been working out of home majorly and without compromising with regards to the products and services. The alternative delivery channels have been super active, and we have seen a major shift with regards to the alternative delivery channel usage, which is very good because that is where all our digital propositions and frameworks that we had been working on over the last few years is kind of giving us the fruit now. The next one. We invoked our BCP plan in full details, and we had been working around that. Let's skip this and go forward. Next slide. We have already covered this. So in terms of, just one slide back, in terms of consumer banking or the alternative delivery channels, the branches I have already mentioned, all the call center has been fully operational. The other areas, the ATMs and other channels have been fully active. As I said, we have taken some tactical methods like enhancing the ATM cash withdrawal limits and stuff. So just to facilitate further convenience for our customers to operate in this hardship time. Next slide. The other operational services, we have been fully functional. The centralized clearing had been working. More than 1250 SOD expiry extension being done. 48,000 loan interest. I mean, as you may know that during the month of April, we had to go by the circular of central bank and reduce the interest rates for all loans in the bank, and that humongous job had to be taken into consideration during this limited scale of operation that we were running. And the credit card operations has also been fully running during this time. Next slide. So we'll skip this. I mean, this is, we have covered this. On the trade service area, the trade shop has been fully operative. We had been slowly scaling up the operation there, maintaining full safety and security for both our staff as well as for our customers walking in. So that the figures on the slide tells you that our operation has not been hampered much, and we have been able to offer or extend almost regular time services to all our customers. Next slide. That's the end of it, right? Thank you. So I just wanted to highlight that how, as a bank, we have been responsive and maintaining safety and security, and at the same time not compromising with regards to the services for all our clients, be it consumer or be it wholesale bank or institutional client. Thank you to all the members of Prime Bank family, as well as to all our stakeholders for their patience and bearing with us in this unprecedented times. At this point of time, we'll get into the question and answer session. I believe there are a number of questions that we have received from the FI friends from all around the globe. If I'm not wrong, I would ask my colleague Saidur Rahman to let us know the questions. If you could just go through them, we can start responding to them. Najmul, if you have any other questions, you can let us know.
Sure.
Sure. Saidur Rahman.
This first one is a very common question, is that since the holiday has been extended till May 15, what is the impact assessment by Prime Bank for the Bangladesh economy?
You see, the impact assessment of Bangladesh economy, as we keep saying, everything will be determined by the duration of the COVID outbreak. I mean, as we speak, the specialists, we are not a health specialist, but all we get to hear is that, that we have entered into the peak period, and that is kind of continuing, because the numbers that we are seeing, the number of tests, number of new infectants, and number of death, definitely we are kind of in a worse of scenario than we were about a month and a half back. But at the same time, the economic activities need to kind of propel, and as a part of that, the economic activities have started. The initial impact is still being assessed. In a nutshell, we can say that the major impact is on the MSME end, as Toyob also, Omar also mentioned during his presentation, that 70 to 80% of the national economy is kind of contributed by the MSMEs all around. The supply chain has been hugely disrupted for last 1.5 months due to the general holidays or shutdown that we have been observing. So as the economic activities have just started to gear up over the last couple of weeks, we have seen movements, we have seen momentum, especially on the large corporate side or on the export-oriented concerns, especially with regards to the textile and garments. We are seeing some movement coming in. So at the same time, the timely initiatives being taken by the government through central bank and to be distributed by the banking industry, the stimulus package that have already been announced, those will be some added benefits, or those will really be helpful for all sorts of business ventures around the country, be it MSME or be it large corporates. And we, from our side, as in Prime Bank, as both Faisal and Omar mentioned, that we are very actively working on the stimulus package implementation. As a bank, we were possibly the first bank in the industry who already disbursed the first tranche of this 5,000 crore wages payment being given by the central bank for the export-oriented concerns. So we are actively working on that, and the economy, in our understanding, it is definitely a little premature to comment that to what extent the economy would be impacted. Definitely it would be impacted. The ADB projection, the World Bank projections, different multilaterals are projecting different negative impacts being occurring on the economy. It will be a better picture for everyone to kind of fathom and say that to what extent the economy is being impacted.
Okay. The second question is on the impact of the cancellation of RMG orders on our Prime Bank customers, and whether any of the customers has come to delinquent or being classified during this January to May period.
Prime Bank is no exception. I mean, we have been a pioneer player in terms of textile and garments portfolio, but we have been from the very beginning of the situation. I mean, if we started talking to all our clients from the month of January, to be very honest, because at that point of time when China was affected, the supply disruption started happening. And we have been in very close communication with all of our clients and seeing how their orders are being impacted, how the supply chain has been impacted. Towards the month of February, the demand side kind of started getting impacted because the EU as well as the USA were the affected geographies. And by the time it entered into Bangladesh and the production got impacted, we saw some movement, positive movement on the supply side from China. And as we speak, Europe and US is kind of coming out of the lockdown situation. But it's our production which is being impacted for the first month. We are no exception. Our clients, some of them have been impacted quite significantly. We are regularly reviewing their order books, and Faisal can add here if I'm not wrong. Through the close communication, so far we have seen that most of our RMG clients are kind of getting back on their feet, and they have started operating. Most of them have started operating their factories as we speak for the last few weeks. And we are in close communication, and we have been able to accommodate their request for this next few months with regards to some of the extension of some of the bills which were maturing, some of the term loan installments, and some of the other obligations that they have had with the bank. So through the customer banker relationship and the background and the credit track record that we have had with them, we have been accommodating given the unprecedented scenario. Faisal, you want to add anything on that?
No, I think you have rightly pointed out most of our government clients, they have resumed operation, and we are doing the extensions, and we are also working on the various government programs that have been enrolled. So soon we'll be starting to get the applications rolling out to central bank and start disbursing the loans. That's all from my side.
Thank you.
Thank you. The next question is the impact on the country's balance of payment during this COVID-19 situation.
This is Habib's favorite topic. Habib, would you like to comment on that?
I think actually everything is highly correlated with this COVID scenario. Right at the moment, whatever data we are getting, we don't see much pressure on balance of payment because both in one side the export is coming down, on the other side import is coming down very significantly. And as viewers understand, the volume of, the size of import is much more higher than the size of export what we have. So on net basis, we don't see much pressure on that side. On the other thing, as we all understand that oil price has come down significantly in the international market in one side. On the other hand, in domestically, the agricultural production is we are getting some good news from that side. So on net basis, we don't see much pressure on balance of payment at this moment.
Okay. The next question is, since the deposit ceiling is 6%, whether incremental deposits are coming?
Whether the incremental deposits are coming?
Deposits are coming, yeah.
Have not seen much of degrowth in terms of deposits, and we have been able to gather more deposits. The response that I would like to give at this point of time is that now, given the health of a bank, or given the health condition of a bank, the consumers have become more and more matured, and the customers are putting their money where they feel safe. So as a part of that, Prime Bank, as we mentioned in our earlier remarks with regards to the presentation, that Prime, through its brand, has been able to establish over the last 25 years as a point or as a place of dependence or a faith or trust. So we as a bank have not faced much of an issue with regards to deposits, so forth. 6% is not a cap, to be very honest. It is for the bank to decide at what rate they will be raising the deposits. But we as a bank, even when interest rates were very high in the market, we had been, as I keep repeating, we had been 100 to 150 basis points less than our peers, but we have been able to grow our deposits decently. So we as a bank have not seen much of an issue as yet, and we think that in a market with all challenges, it would be easy. It is going to be a point of strength for us that customers choose us amongst all the other banks.
Next question. Since the 80-year extra has been increased, whether this will increase to our balance sheet growth?
Habib, any comment on that?
Definitely it will give some room for the banks to grow its lending book. But we need to consider other fact that even though if we have sufficient room, whether we'll be growing or not. Other elements of the environment must be considered before significant growth on lending book. Like, what is the cost of deposit? The 9% rate cap is a new scenario. Then because of this COVID, what is the credit risk environment in the country? So all these things will be coming together in deciding this lending book growth. But definitely it will give some space for the banking industry in Bangladesh to grow on lending book.
I mean, just to add to that, as a bank, definitely it gives us more space to maneuver in terms of lending growth. Cautious, and as Habib mentioned it, the credit climate, post-COVID scenario, or ongoing, during the outbreak of the COVID scenario, we would remain very cautious. So we're not going to be very gung-ho.
Whether there is any impact on our OBU book for this COVID-19 thing.
Habib or Faisal, any comment? Faisal, with regards to the OBU book, do you think any impact?
I would say that we are experiencing some sort of pressure on the pricing. So I think the lines are being, which were readily available earlier, those lines are being squeezed, and we are seeing impact coming on pricing. So that would be from my side.
So that's the challenge that everybody else in the market is facing. So because this is what we think is, this is a temporary situation, as in when the COVID outbreak kind of eases out, the market kind of reawakens, the things should ease up.
The next question is impact on industry-wise for the Prime Bank customers, like RMG customers, trade service, construction, pharma, etc.
Or the COVID?
I mean, they are asking for the industry-wise impact. But
involved in airline, tourism, service industry, these are the ones who has been extremely impacted, and especially the retailers. So in our presentation, we mentioned that majority of the MSME players have been impacted because the small businesses have been impacted due to the shutdown or due to the general holiday of 2 months that we have had. Other than textile and garments and other industries as we speak. Pharmaceutical had initially been impacted because of the supply disruption from China being one of the major raw material provider. But pharmaceutical, we are seeing that kind of slowly turning around. So the hotel, tourism, service-related industries, the retailers, supply chain component, whoever plays a value proposition in terms of supply chain, they have all been impacted severely. Agriculture, or I wouldn't say agriculture, the agro product or poultry has also been one of the major impacted industry.
what percentage of our RMG customers are large exporters, like 10 million and above? And what is the amount of postponed or delayed orders?
100 million and above.
Yes.
Faisal, would you like to comment on that?
$100 million above. See, for CNIB portion, the minimum onboarding criteria is $100 million. So basically, we start with that benchmark. So all pretty much CNIB customers are within that range. Other than that, we would be having around, I would say, 38 to 40 customers.
In terms of percentage, I would say that 60 to 70% of our total RMG client portfolio is going to fall into the category of $100 million plus export.
And whether we have the data for postponed or delayed or cancelled orders?
We do have that. As we said, that we have been in close communication with all our clients, irrespective of their export volume. And we have been logging all the data and regularly updating and taking status of their order book. And that has been a joint approach from the risk management side as well as the relationship team. So we do have that, yes.
Okay. Next question is interest cap of 9% on corporates. This will lead to worsening of asset quality in the banking sector. What is our profitability impact?
Habib?
Sorry, I did not get you. Can you repeat the question, please?
The impact of 9% interest rate on our profitability.
Oh, yes. We have calculated that the impact state on profitability will be something around 250 crore in operating profit.
Just to add to what Habib said, I mean, we are no exception to everyone else in the industry. So definitely this is going to have an impact starting from month of April on everyone's top line.
Next question is, since March 2019, circular on rescheduling of defaulter loans, how has been Prime's experience?
That circular of 2019 March didn't have much of an impact on our portfolio, to be very honest. It was very negligible amount that we have experience in our portfolio.
And in 2019, what was Prime Bank's average loan yields in corporate, retail, and SME segment after implementing 9% cap from April 2020? What are the expected impact of overall loan yields?
I think we have already responded to that. Yeah, that is already being responded. Any other question?
Recent government bailout measures and stimulus packages would not be without risk. What is the projected increase in NPLs?
As we all know that the stimulus package, the responsibility of distribution lies with the bank based on the customer-banker relationship. For us, we can say that at Prime Bank, both Faisal and Omar, they have already mentioned that we are looking at our client base. We are trying to accommodate their requests, but everything is based on proper due diligence, based on the history and the track record they have had with us, as well as having taken into consideration the future prospect and the way their business is being impacted. So for Prime Bank, I would say that we expect the minimum level of new NPA coming out of the stimulus package being distributed, because we would be very strict with regards to the due diligence that we will be doing before disbursing the stimulus package.
Next question is the impact on the interest fees for the month of April and May.
Impact of the interest?
Interest fees.
Interest.
I think this is for interest-free block account. They are
Yes.
The 2 months. Well, definitely it is a significant impact for any bank, and we are no exception to that. But as we all know that the circular has suggested to temporarily hold the interest earning for these 2 months. So we are still awaiting for further directives from central bank with regards to how to go about it in the future. So till then, definitely we are all on the same boat, and this is a part of impact that we all are experiencing.
Next is Bangladesh Bank announced suspension of adverse classification of any loans due to the failure to repay from Jan 20 till 30th June. How is this being implemented? Has Prime Bank given moratorium to borrowers? How has repayment performance been since announcement of this regulation?
If I have understood the question correctly, this is a directive from the central bank. Until June, we are not supposed to classify any new names, irrespective of their repayment behavior. But at the same time, we got to understand that we, as we said, that depending on the credit relationship or the history that we have had with the respective customers, we have been extending some of the loan maturities during this period. So this directive, unless until any further amendment comes in, we can't really comment that how the picture is going to look like, because the duration of the COVID outbreak is going to determine a lot of things. Because unless until the economic activities are back in regular form, nobody would be able to kind of comment that how much each one's business or operations are going to be impacted.
Next question is, how much we have restructured during 2019 and March 2020?
How much what?
Loan restructure, reschedule.
Habib, you have that rescheduling figure?
Yes, it is not very significant for Prime Bank. In 2019, the incremental rescheduled and restructured loan was only less than 1.5% of our total book. So that's it.
Okay.
I'll just add to that a little bit, that primarily it was for the NBFIs.
What is the trade growth target for December till December 2020?
Sorry?
What is the trade growth target for 2020?
What is the trade growth target? I mean, we have to bear in mind the reality on the ground. I mean, the trade growth, as Habib also mentioned and Shams also mentioned before, with regards to the export, obviously the export wallet is definitely going to get squeezed. There's going to be much less demand from the global brands, as textile and garments is the majority of our national export earning. So for us, we definitely foresee less of export as a bank, because the whole market is going to get squeezed. On the other hand, the import, definitely we are not going to see as much of import as before in many of the areas, because the domestic demand is also kind of badly hit. So it all depends, I mean, going again and again, it all depends on the duration of the COVID outbreak, how long this impact is going to last. So it is too early to comment, but definitely as an industry, I mean, as a total wallet, it is definitely going to negatively get impacted.
And the last question is, what is the average cost of fund during January to March 20 and April to till date? And whether we have any net interest margin forecast for
The cost of fund has been how much, Habib, now?
It's less than 8%.
Around 8%, right?
Around say 7% for us.
Around 7% is the cost of fund for the first quarter that we had.
Yeah.
Yeah.
And Nazmul bhai, I think you got a few other questions from the viewers.
Yeah, I think pretty much the questions the same. So I'll be just highlighting 3 questions here. Mr. Khandaka Shoha, he has asked in Facebook, we've just entered the lower interest rate regime in Bangladesh. Do you think that the lower deposit rates offered by bank will discourage depositors to save in banks? At the same time, government instruments are offering higher interest rates. Will it create another liquidity crunch in banking sector? What is Prime Bank plan or perspective on that?
Habib, would you like to take that?
I think, see, the question is where the depositor will be investing in the market, what options they have. This investment opportunity in government savings certificate always there in the market. So in that market also deposit has grown significantly and we offer relatively lower rate in the market. And now you understand that 9% interest rate cap is there. And bank as a commercial organizations definitely will try to increase the efficiency on cost of deposits. And I think this is how it will go move forward. And on liquidity crisis, we don't see the liquidity crisis will be coming in the market, because already it has been discussed that government and central bank has taken lots of fiscal and monetary measures, and they are injecting a huge amount of money in the market. So we don't foresee in 2020 on liquidity side there will be a crisis, not in the local currency and not in the foreign currency also. If you go through the stimulus package a little bit, lots of things are coming with refinancing scheme from the government. I mean, it has been already discussed, 5,000 crore for workers' wages, then EDF funds limit has been increased by around 12,750 crore. In industry, government is injecting around 15,000 crore. On CMSME, the refinancing scheme is 10,000 crore out of this 20,000 crore total package. Then on agri sector, the refinancing is around 5,000 crore. On pre-shipment credit, I mean, lots of money government is injecting in the market. So on liquidity side, local liquidity side, I don't see at all any problems in Bangladesh market. And in foreign currency liquidity side also, what we discussed, that import will be coming down, good agri production in the country. And as you understand, the Eid festival is coming, and we have more than 1 crore people, who are sending remittance from different part of the world. And in this month we have Eid, and after 2 months we have another Eid. And normally what happens is that during this Eid time they send remittance to countries. So on FX liquidity side, and you understand that we have around $33 billion equivalent foreign currency reserve. So both in foreign currency and local currency, we don't see a liquidity problem. In addition to that, we all understand that the demand for credit will not be very aggressive moving forward. So considering all these things, I believe both local currency and foreign currency liquidity situation in Bangladesh will be perfect.
Thank you, Bhai. There is another question where Ms. Sadia Sharmin Brishti asked, we see positive growth almost in every favorable matrix of the financial statements. Congratulations to the bank. Then can you please rationalize a 36% negative growth in EPS? What is the driving factor for this, do you think?
Okay, so the EPS, do you want me to answer this question?
Please.
Yeah. So on EPS book, it was not 37% degrowth, it was only 8% degrowth on solo basis, and on console basis, it was 27% degrowth. Already Rahul has explained about this 8% degrowth. That's mainly we have made sufficient amount of loan loss provision in 2019. And see, what we always believe is that to consolidate our book, to clean our book as much as possible, and our provision coverage ratio has gone up from 65% to 103%, and that is what we want. So the main contributor is incremental provision for impaired assets, and secondly, we have made sufficient amount of tax provisions because our operating profit has gone up by 123 crore, and you understand that this tax provision is primarily based on this operating profit. So these are the basically main two drivers. On console basis, the main contributor was, as you understand, the capital market in the country was performing well in last couple of years. So on console EPS degrowth because of this capital market scenario in Bangladesh. That's all. But in operating profit and solo basis, we have grown more than 22%. Thank you.
Thank you. The next question is, when Prime Bank is planning to launch full-fledged women banking and agent banking in Bangladesh?
Women banking the formal launching would have been done by now had we not faced this unprecedented COVID outbreak. We were actually planning to launch it in mid of April. So hopefully, inshallah, within next month or so, we should be able to formally launch that. Not in the scale that we wanted to, or not in the manner that we wanted to, but it will be in play. Agent banking, as we speak, currently we're just awaiting the central bank approval. So we expect to fully launch agent banking either in Q3 or early Q4 of 2020.
I believe this will be the last questions because we are almost close to the end of the session. How do you plan for affiliation with globally established fintech through revenue sharing, assuming banks' investment in digitization might be lower or shrinker, considering the cost optimization initiatives to reduce CI ratio?
Well, partnering with fintechs or partnering with different, I would say, companies with regards to data sharing and stuff is definitely going to be one of the major focus area for us. Without divulging much of the confidentiality of it, I can say that we are, as a bank, currently working with number of fintechs, number of companies with regards to the digitization of our different products and services and processes, to be more honest. So that is definitely going to continue going forward throughout the year and going forward, because as you understand that under the current circumstances or going forward for next few years, to remain more sustainable and to remain as a strong player in the market, we need to curb with regards to our operational efficiency, operational expenses by bringing in more operational efficiency, and that can only come through digitization. So that is definitely going to remain as our key focus area. I believe you don't have any other question at the moment. So if anyone has any other questions, any viewers, any analysts, or any of our stakeholders, feel free to send the questions at your convenience and we'll be happy to respond to them as and when. Before we conclude the session formally, I would once again take the opportunity to thank all my colleagues present here today during this session. Thank you to all our stakeholders for a beautiful journey of 2019. Thank you to all. I would like to extend our thanks to our Honorable Board of Directors for their continuous guidance, to Central Bank and all other relevant stakeholders, for all our overseas partners, to our subsidiaries, the Prime Bank family, the extended Prime Bank family as we call them, for their relentless effort throughout the thick and thin, rain and shine, to all our customers, lastly, for being with us for last 25 years, for putting their trust and faith with us, and being a very trusted partner in the journey for last 25 years. We can reassure that Prime Bank is definitely going to continue with its sustainable journey for the next more than 25 years to come. And we are here to serve you better, to serve you in a more convenient manner. And under this unprecedented scenario, we have been really adaptive to the new scenario, to the new situation, and we shall continue to offer you the services the way you prefer. Stay well, stay safe, and wishing all the best for all our stakeholders going forward. And let us all remain close and let us all remain partners in this challenging journey of 2020 onwards. Thank you so much from Prime Bank family.